Well, in the US, then inflation rose yet again. Consumer price experienced a 0.4% rise in the month of February, marking a 3.2% increase from the same period last year. Excluding volatile food and energy prices, the core CPI also rose 0.4% for the month and 3.8% for the year, both slightly higher than the anticipation. It still remains above the Fed's goal of 2%. I tell you what, we are joined by a guest tonight to weigh in on the numbers. Santosh Rao, Head of Research and Partner, Manhattan Venture Partners. Welcome to ET Now, sir.
Thank you.
Right. Let's look at the numbers. They have come in slightly higher than what we were penciling in. Markets were rattled in January when the CPI data came in higher than expected, and Fed officials shifted their rhetoric afterwards to a more cautious tone about the easing of the policy. What can we expect from the Fed meet that is due on the April 30th to 1st of May, and how is the market likely to react tomorrow?
Yeah, I think, thank you for having me. This data is slightly hot, but not that hot that they can change their stance yet. So I think we're still counting down to first rate hike in June. I don't think that picture changes much. The key thing is, okay, the headline numbers were slightly up, the core was slightly up, but that was essentially expected. Wasn't a huge surprise. But the key thing was the rent portion of the thing came down, which is a good part of this whole thing, because that's been a big driver of the CPI in the past. So I think that's a good thing. And the PCE that the Fed watches, that's pretty much in control, pretty much trending in the right direction, which is roughly around the 2% range, 2.8 or something. So I think is what the Fed watches, the 3-month average, the 6-month average. So in that sense, I wouldn't panic here. I think everything's on course for rate hike in June, rate cut in June, and things will continue to stay. And that's why you're seeing the stock equity markets act up well right now, and the bond yields slightly going up here and there, but essentially staying within the range. So net, I say no change based on this data.
There will be no change based on this data, and there is nothing to worry about. That's what you're saying. But the energy prices had eased earlier in the winter, putting some downward pressure on the headline readings. But the rising gasoline prices, that's a bit of a pain point. Is that likely to bolster the CPI print going forward? And is that going to be a point of concern, the rising energy prices?
Yes, for the headline numbers, yes, that definitely is an issue, but that goes up and down. That's based on the geopolitical, the supply-demand imbalance, so that can move either way. So I think that's definitely a tax on the consumer. But at this point, it's okay. We'd rather see it go down than go up. That's a given fact. But so far, I think it's still okay. We don't want that. See, what's happening is the goods inflation is pretty much under control. In fact, it's trending down. It's the services portion that's proving to be very sticky, and that's where the whole issue is. But then the rent proportion of that is coming down in this data, so that's a good portion. That part is very helpful. But there are some other things that went up: the automobile, the used cars, and all that. That's kind of not trending the right way. But generally, I would say the long-term trend seems to be down. So I don't think the Fed is going to take this as a trend yet. Yes, they want sustainable inflation coming down. I don't think they can make a big call based on today. But if it persists, if the next month is way hotter than expected, then we'll have 3 months of hotter than expected. And then you start to think. But at this point, I think the Fed is pretty much in line. Also, given the other fact that the real interest rates are pretty high, around with 5.25, and at inflation coming down closer to 3 and 2.5, down the road, the real interest rate becomes very high, and that's very restrictive. I think the Fed has room to cut at least 2 or 3 times this year, even after this data.
All right, Santosh, thank you so much for joining us.
Thank you.